Welcome to Financial Focus, brought to you by Gulf Coast Financial Services founder and CEO, John Kuykendall. John and his team of financial, legal, and tax professionals have provided North Florida savers and investors sound, comprehensive financial guidance for over 25 years, helping you to achieve important life and planning goals. Be sure to like, subscribe, share, and tune in for more Financial Focus by visiting GulfCoastFinancial.net.
And we are back once again with John Kuykendall, founder, CEO of Gulf Coast Financial Services. Gulf Coast Financial Services, ladies and gentlemen, has been named Best of the Best in Financial Services, serving North Central Florida savers and investors by the Lake City Reporter and their readers, 7 years and running. So we are here joined by someone who can provide that guidance and perspective that we all need to uncomplicate the complex financial world. And we always appreciate that guidance. John, thank you for joining us on the program once again.
Well, thank you, Peter. It's great to be here. I really enjoy this. I think we've got a great show today that we can help some people understand more about income planning and why we need to do it. And I'm just so excited. You know, income planning, I know we talk about that quite a bit on this show, but it really is important, Peter.
We often and frequently and recently have discussed the planning process and that financially focused plan that you put together. But John, you've mentioned that while a lot of people do have a plan to save and accumulate assets, some people just wing it, but it works better when we have a plan. But not a lot of people that you talk to actually have the income plan, which is essentially the culmination. It's the second half of the game. It's how we turn everything that we've worked so hard for into what we need it to be in retirement.
Well, that's right, Peter. And, you know, so many people get to that point where they've accumulated assets and then they don't know how much they can spend. So they either spend too much early or they don't spend enough. I met with an individual who has quite a bit of assets, doesn't plan on leaving a lot to the kids. He wants to enjoy it himself, which is fine. I believe in that. But he has more than enough to give him a really great lifestyle. And he was concerned that he wouldn't have enough money. And that's what the income plan will really help us do. It'll help you focus on take out what we need while we can still do something. You know, I go back to that old saying from Tom Hagee, the three phases of retirement: go-go years, the slow-go years, and then the no-go years. And so while we're in the go-go years, early, we want to be able to take out more, but then as we get older, we'll slow down on how much we take out. But we also have to account for all the risk factors that are going to affect our retirement while we're retired.
Yeah, the concept of having enough income in retirement, it's kind of interesting. Is it not enough? Is it too much? We got to find that Goldilocks sweet spot with our planning. And we've got to make sure that we are taking out enough that we can be comfortable and do all of the things that we envision, but not so much that we risk or jeopardize running out of money in our later years.
Right. That's right, Peter. I mean, that's what we want to do is we want to be able to take into consideration all the risk factors that are going to affect us during our retirement, but we don't want to overspend. And also, it's how we take our money out. We don't want to spend all of our money that we have that's not deferred while we don't have to take it, and then later end up paying more in taxes. And we have to be really careful what tax bracket we're in. So, you know, we've got to kind of phase this stuff out. It's a lot more complicated. I tell my son all the time, you know, getting old isn't as easy as I thought it was going to be.
Indeed. If they say if you're going to be, well, what is it? If you're going to be dumb, you've got to be tough. But if you're going to get old, you've got to have been some tough times as well. And so the goals, John, then of designing that retirement income plan is so that times aren't so tough as we live our way through retirement and get to enjoy some of our life.
Well, that's right, Peter. What we want to do is we want to ensure that plan has a continued growth. We can't when we retire, get so conservative with our money that it's not going to grow for us, because with inflation, you know, inflation actually historical is 3.8%. I mean, a lot of people say, well, inflation's 2%. It's actually 3.8.
And a little higher right now than those historical averages.
Yeah, I'm honestly feeling that every time I go to the store to buy anything. So we want to make sure that we have continued growth. We can't just put our money in the bank and in a safe bucket and not earn any interest on it. We've got to have a portion of our money grow for us. The other thing is that the most important thing is that we want to generate enough income to last a lifetime, because the two things that seniors don't want to do is, one, we don't want to run out of money. And the second thing is we don't want to go live with the kids. And they don't want us, trust me. I mean, they don't want you to come live with them. That's a disruption of their lifestyle.
Well, at the same time, like the gentleman that you spoke to, not all of us want to leave a big pile of money behind either. So the written income plan, John, is what's going to allow us to find that sweet spot and make sure that we maintain the comfortable balance of enough income to achieve those goals. But truth be told, John, if we've got that written retirement income plan, the chances that we do end up leaving something behind are typically increased.
Well, it's greater than not having any plan at all, Peter, because if I don't have a plan, my chances of running out of money prior to my demise are a lot greater than if I have a plan, a systematic way to spend, and I know how much I can spend. So, we want to make sure that we set up a plan that figures out how we're going to pull the money out of the account, how we're going to have a growth bucket, how we're going to have an income bucket, and then how we're going to have a liquidity bucket. We want to keep some of this money liquid.
So, John, once you have helped a saver or investor design an income plan, does it typically actually improve their overall portfolio and asset diversification?
Well, yes, Peter. I mean, that's one thing we try to do is make sure that we're diversified so that we have our assets. We don't have all of our eggs in one basket. We've spread out among many sectors, many different types of investments that we can do now. And with the software and the computers we have today, we're much more sophisticated in coming up with diversification. Back in the 90s, you might have had 20 mutual funds, but when you looked at them, 80% of the money was all in 5 or 10 stocks. And so today we can look at that and make sure that we're diversified among a large number of investments. And certainly diversification is a great way to make sure that if one sector is down, the other sectors usually aren't. So we're not going to be. We got to protect our money. We got to have it preserved.
And then with the portion that we are planning to utilize for income generation for a time period in the near future, generally taking steps to be a little bit more conservative and protecting that portion of our savings.
Well, that's right. We want to make sure that we've got a safe bucket so that we have some of our money that's liquid that we can pull out. We don't have to pay taxes on it. It's not going to affect our Social Security and our Medicare. And so those are certainly things we want to do. The one thing that we have to do when you talk about diversification, we also have to make sure that our assets are doing more than just one thing. And so today with the hybrid products, we can take care of some long-term care requirements, some survivor insurance needs, much better than we could before. I got a notice yesterday that one particular long-term care company is increasing their premiums 41%. So if you had a long-term care policy and you were paying, let's say, $1,000 for it, it's going up 41% next year. You can't keep those policies going at that kind of, price increase.
Yeah, talk about inflation on our cost of living. That would be a pretty significant increase. We're talking about, lumber and housing prices increased, but the price of those long-term care policies, the traditional approach to long-term care where those prices can increase can have a dramatic impact. Some seniors, some retirees have had to basically just forfeit the policies, John.
Well, that's right. They have. I've had several of my clients come to me and say, hey, I can't afford to keep this. What am I going to do? And with the price nationally, I think it's $97,000 a year now for a long-term, a real nursing home situation, ACLF. So that you can't afford to pay that very long out of your assets, especially if you have a surviving spouse that's going to need that money going forward. So we have to have other ways that we can address that need. And through the income plan, we will take care of that as we look at it. We'll make sure we're covered.
Well, John, you mentioned that diversification was about making sure that our total portfolio was doing multiple things. Now, typically we talk about money can do one of about 4 things for us: growth, safety, liquidity, income. By having that retirement income plan, we are helping to define which dollars are going to do which goals, but these hybrid products give us a couple additional goals and tasks that our money can be performing for us.
Well, that's right, Peter. I mean, while our money's sitting there growing, it can also be growing in our long-term care bucket, because that hybrid product will provide that long-term care. So it's not like we're taking money and just tying it up and not having it for use. It'll also give us a long-term income. So we can get a long-term predictable income, but we can also get some type of long-term care with an annuity or with a life insurance policy. Now we can do the same thing.
And then we want to keep as much of our money as possible. So, John, by designing and having a written retirement income plan, helping us to be more efficient and minimizing taxes on our total portfolio value.
That's right, Peter. And the income plan, I can't stress this enough. The income plan is really important. You'll be surprised at the number of people I sit down with and I tell them, look, we can't sustain the amount of money you're drawing out of your accounts right now. We need to sit down and come up with a budget and figure out where we're going with this, or we're going to crash this before you die. And so it's much better to do that in the beginning, because then we have a lot longer time to do it, than it is to come up to the point where all of a sudden I'm having to call you in because we're getting short on money, or I'm calling you in and saying, hey, look, that draw that we were supposed to get next month, we don't have enough money in the account to make it. And so now you're going to have to live on your Social Security.
Sure. Or on the other side of that, John, I think that with your example earlier, you said that your gentleman was trying to pull out a certain amount, maybe $400 a month, and that was just a drop in the bucket of what he could be pulling out. I think so many of our regrets in life are the things that we could have done that we ended up not doing. If we get 10, 15, 20 years into retirement and then realize that we could have done so much more, but we were scared to spend, that's likely and common result of not having that written retirement income plan.
Well, that's right, Peter. When somebody's at even a 5% growth rate is going to be able to make $50,000 or $60,000 a year, and they're concerned about pulling out $5,000, that shows me that they don't, really have a grasp on how much money they have and what it'll do for them. And so that income plan is going to free them up. Or you'll be surprised at the people that come in and say, John, I really want to retire. Can we work up an income plan and show me when I can, how many more years I have to work? You'd be surprised at the ones we work it up for, and we say, look, based upon what we know, you can retire now. And then they end up working 2 or 3 years more because they're happy.
Works a lot easier. Yep.
Yeah. I can walk out on my boss any day I want to,
And then it's my choice. I choose not to today. I can put up with you just a couple more days longer.
Right.
Yep.
It's kind of like winning the lottery, Yeah.
Well, and then finally, John, by having that written retirement income plan, also increasing the likelihood of leaving that legacy behind, and by having that written retirement income plan, leaving a more tax advantaged legacy behind. And I know a lot of people are of the mindset if they leave money behind, that's somebody else's tax problem to deal with. But I'm sure I would rather leave more money to my heirs, to my beneficiaries, than to the IRS. And so you can help people map that out as part of the written retirement income plan and as part of your company structure, where Gulf Coast Financial Services is partnered with Gulf Coast Tax Advantage. For a lot of your clients, you're running reviews on both sides of that equation each and every year.
Yeah, when we run the income plan, we will do that. We'll show you what tax bracket you're in, what's going to happen during retirement. A lot of people think they're going to be in a lower tax bracket in retirement, and that's really not the case in most cases. So what we want to do is show you where you are. We want to show you what's going to happen if you do certain things so that we can kind of educate you ahead of time. But we're going to work that out with you. Leaving the legacy is great, but we don't want to leave a burden on the ones we leave behind. And so we want to be able to explain to you how that's going to affect them, how it's going to affect their taxes, and make sure that we do a proper distribution. Now that we can't do the the stretch IRA for subsequent beneficiaries. The spouse can get it, but anybody after that, we have to pay it out over 10 years. We want to make sure they understand that and show them how it's going to be affecting, and also let their heirs know if they want to.
Sure.
But we want to make sure that we've got liquidity also to pay those taxes, because that's certain. The other thing too is don't forget that if I'm a married couple and one passes away, we're going to lose almost half of the Social Security income. And so I need to make sure that the surviving spouse will have enough money to live on during that time.
All of these factors discussed, uncovered, strategized for during the process of designing that written retirement income plan, the financially focused retirement income plan. And if you'd like to get that plan or double check your current plan, pick up the phone and give a call, 386-755-9018, to reach John Kuykendall and the team from Gulf Coast Financial Services. When it comes to coaches in professional sports, they don't just formulate a game plan for the first half of the game. But John, so frequently as we look at our financial progress, Americans have been taught how to plan and be successful in the first half, but the second half has kind of been ignored. The process that you take them through, having that written retirement and financially focused income plan, that's really formulating the game plan for winning in the second half of the game.
Yeah, that's right, Peter. I know when I was coming along, all we talked about was accumulation, saving money, making sure we had retirement. That was what I was working on for my retirement and my wife's retirement. And so I really wasn't focused on what was going to happen to me. And so when I reached 65, we didn't have the knowledge and the computer programs we have now. And so I made some mistakes that I don't want my clients and people out there listening to make the same mistakes. And that's why we do all this, is we will show you how to maximize your Social Security, when to file for Social Security, and also help you with your Medicare and explain all the pitfalls.
Well, if you would like to get a better understanding of those, if you would like a professionally designed, structured plan, if you would like to double check the current plan that you have, pick up the phone, give Gulf Coast Financial Services a call, 386-755-9018, 386-755-9018. And John, you've got your book, Financial Focused, and you make that available to listeners to the program as well.
Sure. All you got to do is ask us for it. We'll be glad to send it to you. Hopefully it helps. It does talk about a lot of the things we talk about on the podcast.
Well, again, if you would like that book, if you would like your specific plan designed, pick up the phone, give a call, 386-755-9018, 386-755-9018. John, always a pleasure. We appreciate the time, and I know that the guidance that you provide has helped so many savers and investors across North Central Florida feel better, more confident in achieving their financial goals.
Well, thank you, Peter. It was great to be here, and I certainly hope so. Thank you.
Be sure to like, subscribe, share, and tune in for more financial focus by visiting GulfCoastFinancial.net. The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes. John Kuykendall is registered with and securities are offered through Kovac Securities, Inc., member FINRA SIPC, found online at www.kovacsecurities.com. Advisory services are offered through Gulf Coast Financial Services, Inc., a registered investment advisor in Florida. Gulf Coast Financial Services, Inc. is not affiliated with Kovac Securities, Inc. or Kovac Advisors, Inc. Past performance is not indicative of future results. All investing involves risk. Investment decisions should be based on your own goals, time horizon, and tolerance for risk. Due to various factors including changing market conditions and/or applicable laws, the content may no longer be reflective of current opinions or positions.